At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Welcome to the Passive Cash Flow Podcast, where we help people invest in real estate. Now, some episodes include interesting guests that span dozens of different types of industries. Other episodes offer analysis of popular topics that people seeking to learn how to build passive wealth in real estate. So listen in and enjoy our off-the-cuff podcast made to entertain, educate, and help you learn how to create passive wealth in real estate. So today I'm going to talk about a topic that we do get asked from time to time, not as often as maybe the $30,000 or $50,000 mark, but how to invest $1 million. Now, this is going to be a different strategy than some of the other strategies we've talked about with smaller investment amounts, because $1 million is obviously a large amount of capital to invest. So perhaps you're an accredited investor, perhaps you own a number of businesses and already own some real estate as well, or maybe you inherited this capital and you're now looking to put it to work. So what to do first before you invest $1 million? Let's go over that plan. Let's then talk about different ways to invest that in and out of real estate, and how to make sure that this $1 million grows to $2 million and not becomes less than $1 million. Rule number one, don't lose money. So let's break right into this now. How to invest $1 million. So first of all, pay off your debt, right? If you do have debt, now I'm not talking about real estate debt necessarily, but bad debt like credit card debt, student loan debt, high interest debt that is not secured by a strong asset that produces cash flow, or really any high interest debt, even if it is secured by an asset. The bottom line is you do not want high interest debt. Now, a low interest debt secured on an asset like an apartment building is good debt. So you wouldn't want to necessarily go around paying off all your debt on all of your assets, as long as it's low interest and it's backed by a strong cash flowing asset that's worth more than the debt is worth, of course, by a good amount. But if you have bad debt, pay off that debt. Credit card debt, student loans, get rid of that debt. Number two, top up your emergency fund, right? Now that you have $1 million in capital, it would be good to have more than 6 months reserves. You can put that into a high interest savings account or even a stable coin, and that'll allow you to earn a nice return on that investment. Maybe not as much as investing in a real estate syndicate, but at least the money is going to be liquid, going to be there. And even if you have 6 months reserves available, it's important to have even additional emergency funds, maybe in, like I said, in a high interest savings account or a stable coin in cryptocurrency can allow for the funds to be liquid, but also earn a solid interest rate consistently as well. Number three, you want to determine your investor profile, right? So are you an active investor? Are you a passive investor? Do you work 60 hours a week and not really have time to focus on these investments? Then you probably want to hire the right professionals, whether that's a good stockbroker or maybe a real estate syndication that has real estate professionals that allow you to invest in great opportunities in the real estate market without doing all the heavy lifting behind the scenes. Of course, that's what we do here at People's Capital Group. So you want to really figure out, are you an active investor? Are you passive? Now, if you're active, you really need to have experience in that space. And maybe you know a lot about stocks and options and you can make very good returns there. Maybe you want to team up with someone that knows it better though. So determine if you're active or passive. And of course, you can always diversify some capital into something you're going to do passively by hiring professionals, which is probably wiser and safer. And then some, maybe a smaller amount of this $1 million could be put into something more active if you want to try your swinging the bat at something more active, like starting a business or owning real estate in a more active position, not through a real estate syndicate, which would be a passive ownership of real estate. And of course, we want to determine what are your goals, right? So are you looking to build this capital aggressively? Are you trying to get a return on investment that's greater than 10 to 12%? Then you may want to put some of it into a higher risk opportunity. We'll go over different ways to grow that capital in and out of real estate. Or you're looking more for a retirement nest egg. You want to make sure that money's always there. Maybe an annuity makes more sense, or even whole life policies or variable life policies. Ways to make sure the money's always there. As we were saying, high interest savings account, a real estate that's professionally managed, maybe a real estate syndicate, and different types of ways to make sure that the funds are growing and not losing value to inflation, but also backed by solid assets or in an asset class that's safe and secure, and the funds are going to be there when you need them down the road. Also, what's your timeline, right? Are you 35 years old and you want to build this capital over the next 20 years? Or maybe you're 60 years old and you're at the time of retirement. So you need something that's going to produce strong cash flow, and you're going to live on the cash flow of the investment and not the principal, right? Because you never want to pick away your principal. You always want to live on the proceeds of the investment if you have to. So what's your timelines for producing returns? Of course, the more time you have to produce returns on an investment, the better it's going to be. So it's important to understand your age, your timeline, and that's going to determine how aggressive you want to be with this $1 million investment. And that'll bring me to, of course, risk tolerance, right? And again, this depends on your age also. Do you have a family? Do you have a bunch of other assets that are producing strong income? Is this more of a play capital, or is this super important capital that, hey, this is all you have, right? So that's going to determine your risk tolerance, and also your age will determine your risk tolerance as well. Older individuals are going to have lower risk tolerance. Younger individuals tend to have higher risk tolerance. A higher risk will allow for ideally more aggressive returns, but then again, a low risk tolerance can also put your capital working where at least it keeps up with inflation. So these factors are all going to play a role in your risk tolerance. And here's some options for investing that capital that you can put it into that may work for all different types of investors, depending on their risk tolerance, such as real estate crowdfunding. Right? Those websites you can go to, those real estate syndications you can invest in. This is when capital is pulled together to buy a bigger, stronger, better property. It's generally managed by professionals on a larger scale. You're not doing the heavy lifting behind the scenes and finding the deal and analyzing it and managing a management company or personally guaranteeing debt. So it's really a passive investment option that allows people that don't have a lot of experience or know-how in real estate to get into real estate investing and start earning returns without doing all the heavy lifting behind the scenes. So real estate crowdfunding can be done through smaller levels on websites. It can also be done on larger scales through real estate syndications where they can accept $1 million investment. So you want to look at all different types of options for real estate crowdfunding. But let's say you're younger and you're looking to be more hands-on. Maybe you want to actually own rental properties and hire a management company. Well, that's a great way to build wealth in real estate, but keep in mind, managing a management company can be a full-time job depending on the size of the real estate. Chances are, if you're investing $1 million, you're going to be able to buy a nice piece of real estate, maybe like a 10-unit property or a larger property depending on the market you're buying in. So that $1 million can go a long way with rental properties. You can also buy a number of properties, but keep in mind, having more units under multiple locations is more expensive. It's easier to have more units under one roof, a larger building like an apartment complex as a rental property. So now, of course, you need to manage the management company, deal with the bank, personally guarantee the mortgage, make sure you're getting it for the right price, have a value add strategy that's executed over a number of years. And if that all sounds like too much, then the first option is probably a better option with real estate crowdfunding, where you're still owning rental properties, you're just not doing all the work to get there, and that can be a much better option. Chances are, if you have $1 million to invest, you're a pretty busy person. That's probably how you got the money to start with. Of course, real estate investment trusts, REITs, right? So these are stocks backed by real estate. Now, this can be a great way to get in and out of real estate very quickly. These are very liquid options, meaning you could invest today and take it out tomorrow, which you can't really do with a real estate syndicate. Usually with a real estate syndicate or a crowdfunding opportunity, you're locked in for 3 to 5 years or something like that. So a trust, a real estate investment trust, a REIT here, can be a good way to still get into all types of different real estate, like self-storage facilities, apartment complexes, warehouse spaces, industrial, retail, office buildings. So REITs can own all different types of real estate in all different types of markets. It's a nice way to kind of diversify over a number of different properties and markets and be pretty liquid, but still be based in the real estate market. Now remember, with REITs, you're not going to get tax depreciation. You're going to have more volatility, and you're not actually diversified out of the stock market. It's a stock market investment. So with REITs, you don't get all the benefits of owning real estate, like the biggest benefit, which is tax depreciation, because it's a stock and you can't write off cash flow or dividends in a stock. You can only write off cash flow when you own real estate through maybe a crowdfunding source, like a real estate syndication, where you get tax depreciation each year and you can write off your cash flow. A REIT does not give you tax depreciation, so you can't write off the dividends you're earning on the investment, but a REIT can produce strong dividends. The stock market, of course, you have mutual funds, you have EFTs, exchange traded funds, you have tons of different options out there. To get into the stock market, of course, you have bonds as well. Bonds are not going to be as aggressive as the stock market. Now, of course, with the stock market, mutual funds tend to be the best. You want to be invested over a number of industries, a number of businesses. You want to have an investment strategy. So you want to talk to a specialist about that. See, I'm a real estate specialist, so I actually go to a specialist for my stock investing because I'm smart enough to know what I don't know. I'm not a good stock investor, right? I'm not good at picking stocks. Don't come to me for that. I'm a real estate pro. I've done over 250 real estate transactions and built a $20 million portfolio and helped almost 100 people invest in real estate. So that's what I know. So I hire stock professionals for my stock investments, and bonds are also another option to invest that $1 million wisely. Bonds are going to be a more conservative option. That's going to be for someone who just really wants to park that cash and make sure it's always going to be there, but it's not really going to keep up with where inflation is right now. Most bonds pay about a 2 to 3% interest, but there are higher risk bonds with higher rewards as well. And you have exchange traded funds. So exchange traded funds are portfolio funds that invest in stocks or bonds, and they can be index funds that track popular indexes. They operate a lot like a mutual fund, essentially the same idea there. So the benefit of this, of course, is you can be over a number of industries or be specifically in an industry, or you can own a number of different exchange traded funds. So in different industries as well, healthcare, technology, commodities, real estate. So these can all follow those markets and those industries, and you can be invested over a number of industries and have a good strategy there. Invest in a business, right? Of course, businesses are great profit centers. You don't want to necessarily be managing the business day in and day out, but something like a laundromat or a car wash can be a great cash flow producing business, consistently in demand. I know healthcare is a great place to be. Of course, real estate's a good place to be, but investing in a business, you really have to know what you're getting into. You don't necessarily want to be on the hook for the management of the business. You want to probably hire professionals to do that the right way. And this would be one of the more risky options here, depending on how you're invested in a business. You could be an angel investor kind of in a startup. That could be a high risk, high reward scenario, right? You wouldn't want to do that if you don't want to lose the money, right? And a startup is a risky investment, but it could be also high reward. Then you have venture capital investing, which is investing more in established businesses. That's going to inherit a little bit less risk, and also a little bit less reward. But still, being a venture capital can be a huge return on investment, much greater than a passive investment like a mutual fund or a real estate syndicate. But of course, venture capital investing is just that. It's a venture. It could succeed, it could fail. So if you're looking for a more risk-adverse investment, investing in a business probably isn't that option. And then we have private lending. So peer-to-peer lending, a good way to earn high returns. You can charge higher interest rates on individuals that might not fit into the box that a business or a bank wants them to fit into. This can be lending to a business as well, but private lending, again, can entail a lot of risk, especially if you're lending to an individual. I wouldn't lend that whole $1 million to one individual, but if you have maybe 50 different people taking smaller loans where you can charge a higher interest rate, even if some of those loans fail or only put you partial paybacks, you're still going to ideally be ahead of the curve. But again, private lending can be a higher risk option here with higher reward. Lending to real estate could be a good option, but again, that can be management intensive, underwriting the opportunities, just like you have to underwrite a borrower. So private lending could be a good place to invest, but you want to make sure it's secured. And if it's not secured and you're doing personal loans, so that's pretty high risk. You want to make sure you're investing in the right people there. And that would be a definitely high risk, more active option than some of the other things we've mentioned in this podcast. So final thoughts, if you're looking to invest $1 million, the bottom line is you want to invest it wisely, safely, and lucratively. So we want to grow that investment at least a 10 to 12% cash on cash return. That means if you invest $1 million over 5 years, at the end of that, it should be $1.5 million, right? So that's a 10% cash on cash return there. And we want to build that even stronger and faster over time. So we do that here at People's Capital Group. We're a great place to invest $1 million. There's also other real estate syndications out there. Real estate is really tried and true. Apartment buildings that are mismanaged, that turn into producing assets, is what we focus on at People's Capital Group. So definitely could put that $1 million to work in apartment building syndications. That's a great place to do it. But we also talked about a number of other options as well. Paying off your debt, topping off your emergency fund, determining if you're an active or a passive investor, determining your goals and your timeline as well, and how much risk can you tolerate, right? Do you want to be tossing and turning in bed worrying about your investment, or do you want to be secured in a nice investment and not really have to worry about it, just collect those checks as they come in? So we talked about real estate crowdfunding, real estate syndications, essentially, rental properties and managing a management company and being on the hook for the mortgage, or real estate investment trusts, REITs, stocks backed by real estate. Talked about mutual funds, EFTs, bonds, and different ways to really diversify that investment, maybe investing in a business or even private lending as well. So hopefully you enjoyed all these options. I'm Aaron Fragnito of People's Capital Group. If you are looking to put that $1 million to work, we're more than happy to build your wealth together in real estate. We are one of the best options to invest $1 million because we have an in-house management company that allows us to manage our assets to a T. So you can learn more at peoplescapitalgroup.com. You can enjoy weekly podcasts, monthly webinars, events at our office in New Jersey, and of course weekly blogs as well. But I'm Aaron Fragnito of People's Capital Group. Let's team up and build that wealth together. I hope you enjoyed how to invest $1 million. Thanks a lot. Have a good day.